All right. Hey guys, I'm Dan here, and I'll just talk to you for just a minute. So we're right at the end of the year. Trading volume is really pretty low, which is it always is. And so the way I look at it is if you're kind of plinking around, and I don't mean that in a negative way at all, but if you're just kind of plinking around playing with stocks, I think that's great. It's a good thing. Just make sure you don't get hurt. In other words, make sure you are not just a trading junkie that just shows up in the morning saying like, "Hey man, what are we doing today?" You don't want to trade. That's not trading. That's just playing the market. And I've never met one person that's made a lot of money who says they just like to play the market. This is a serious business. However, sometimes guys show up in the office on a Saturday to do some work and they wind up surfing the internet a lot, not doing that much business, but still they're there. So you can look at really trading in the same way. It's okay if you just like to go in and trade a little bit. Just make sure that you're focusing on making money as opposed to just being entertained. Because I'll tell you one thing, man, you know what's really freaking entertaining is to lose a shitload of money in one day. That, my friend, is total entertainment. That's why some people, pardon my expression there, but jet lag is a real thing. Anyway, the point is that um, when you lose a lot of money, it's really entertaining. When you make a lot of money, it's really entertaining. The latter would be my preference. The former, not so much, though I have done both. The point is that this is really the time, well, I guess you could say every time, but this is the time when you really want to start thinking about building habits, about building good habits. I know it's the whole New Year's resolution thing coming up. I've already made mine. They're a little bit different. It's not, I resolved to do this. I'm going to lose 15 pounds. I'm going to do this. I'm going to do that. I do mine in a real simple way. I think I might have described it before, but I'm not going to get into a lot of detail about it. I think that you should really be more. Okay, had to pause for just a sec. I had a dog issue. Um, Anyway, oh, I know what I was saying. As far as like the way I look at each new year, I'm starting to do it this way. This is what success looks like, period. That's it. Not like in 2026 or this or that, but just this is what success looks like. And I don't write down specific goals like I want to double my trading account in a year, or I want to get 200%, or I want to get 50%, or I never want to take a loss bigger than such and such. Well, the last one should be just a part of your rules anyway. But the point is, I think that, and this is just for me, you do it however you want to do, and I won't know. Um, I don't, I don't look at um, the way I'm going through life now as moving from one goal to another, from achieving one goal to the next. And the reason is because if if I don't feel like I'm successful until I reach a certain goal, then my life is defined by being unsuccessful on every day until I reach that goal of being successful. I'm unsuccessful. Okay, well, that's a real crappy way to go through life because what happens if you don't meet that goal? Guess what? It happens. So if I don't meet a certain goal, then what? I'm gonna I'm gonna feel like a flippin' loser. And who wants to do that? Like even didn't Dean Wormer say something like, fat and going through, or what is it? Fat and stupid is no way to go through life. Something like that. That's Animal House. But the point is, I don't really think of myself as just moving towards a certain concrete goal. And like in trading, it's a a numerical goal. And this is what I'll tell you. I was talking with Scott a couple weeks ago. I guess I'm doing more of a FaceTime video than charts. I'll get to the charts. But when Scott came down, we were talking about a lot of things. And one thing he asked me, which was, I thought a real interesting and happy question, was he said, do you remember how you felt when you became a millionaire? Because kudos to Scott, I think that's kind of happened. And he asked, do you remember how you felt when you became a millionaire? And I said, actually, yes, I do. And I remember it very distinctly. I kind of knew, generally speaking, where I was financially. Stock Market Mentor was doing pretty well. I dug myself out of a big asshole, big hole, and things were going well. And I had all these goals. I had all these things that I wanted to be doing as far as trading, as far as my business and various other things. And becoming, like the first thing old Jed's a millionaire. That's great for the hillbillies, Beverly Hillbillies. But I never thought the next thing old Dan's a millionaire. But I do remember one day, I remember exactly where I was in my back room in my little house on Witham Road in Encinitas. I forget the exact address, but this is where this whole flipping thing started. It's where I made my stand. And I remember looking at my account one day, and it was like $1,300,000 or something. It was just barely over $1 million. And I remember looking at that, and I felt pretty good about myself. And I remember literally and audibly saying, and then I went right back to work. My point is, my goal was never to be a millionaire. I mean, any fool can do that. You want to be a millionaire? Go down to the exchange thing or whatever and exchange, $12 for Zimbabwe dollars. Now you're a millionaire. My goal went much deeper, and that was just to get myself on the right footing to do the things that successful people do, et cetera, et cetera. And I don't want to turn this into a motivational thing for you. But all I'm saying is this. If my goal was to be a millionaire, when I looked at that account, balance and I saw $1 million plus there, I'd have been doing a jig. I'd have been going yippee-ki-yay, yay, yay, and like treating myself to something or bragging to all, well, I don't do that, but I was going to say like bragging to all my friends or something. But that wasn't my goal. I was hitting my goal every day because it wasn't really a goal. It was just like, what do successful people do? What do people do who are really successful? Okay. And then if I'm doing things that successful people don't do, well, then I'm kind of stupid to think that I'm going to reach success that way. So it's like that Dwight dude said on The Office. If I think it was something to do when I don't, how do I keep from doing stupid things or something like that? And he said, well, I think to myself, what would a stupid person do in this case? And then I do not do that thing. Okay, I didn't quote it exactly, but it's really funny as hell. But the point that I'm making is, if you want to be successful, first of all, then define success. Like, what is success? And for me, it's a series of habits. It's trends. It's like, I do want to improve my health this year. I don't care so much about percent body fat. I'm just never going to be super, super lean. I don't have that kind of body type, but there's other health metrics that I have. Okay. I just want to be trending in the right direction. I don't have a specific set point for lean body mass or resting heart rate or any of that stuff. But I just have certain things that I'm working on. So as long as I'm working in the right direction, then that's what success feels like. Now, let me get this to trading. with trading, you can double your account. And if that was your goal, you can double your account and feel like a raging success, like, oh my gosh, I did it. Trading is literally, in my view, like the hardest freaking thing on the planet to do. It's really, really hard because it requires so much self-discipline. And self-discipline comes through proper application of established and proven rules. If you've got rules that are established, rules that are proven to be profitable, then your discipline just simply mandates that you follow those rules. And once following those rules becomes a habit, kind of like Tom Brady in eating well, eating the things that he eats, then it no longer requires discipline. It's just what you do. And so with trading, you can say, well, I want to double my account. All right, well, then you get some home runs, you hit some grand slams, some stuff happens, some lightning strikes from the sky, and you've doubled your account. Okay, well, that doesn't mean you're a great trader. That just means you have twice as much money in your account as you used to, but you may totally suck as a trader because you took way too much risk in order to make that money. And if that's the case, then now you have twice as much money to lose when your risk finally goes against you. And so in my view, if you want to be thinking about success as a trader, don't look at particular numbers. That'll kill you. I'll tell you that, and from personal experience. I don't need to give you numbers, but if you've got a certain percentage or a certain numerical landmark that you want to hit, then as you get closer to that, your tendency, and I'll bet some of you are going, hell, that's me. As you get closer to that number, your tendency will be to take more risk because you want to hit that number. Oh, I just got to do this. If I just do this, then I'm going to hit that number. That's going to wind up hurting you very much because now you've assumed that the market cares about you, and it doesn't. And as I've said many times, if it knew you, it wouldn't like you. Why? Because you're trying to take money from it and you're not working very hard for it. So, like, I could meet somebody and I could like them just fine. Maybe they're doing a little work for me. But as soon as I feel like they're taking advantage of me, like they're wanting me to pay them a lot more than they're worth or a lot more than they're producing or something like that, then I don't like them very much. And I'm ultimately going to wind up saying, you have better opportunities elsewhere. The market's the same way. So the market doesn't care about your stupid $1 million goal or your 100% goal or your 200,000 goal. It doesn't care. You shouldn't either. You should be focusing on trading well. That is what success looks like in trading. This is why I've created this SMART trading process, SMART, stock and strategy, market, attainable, risk, reward, and tracking. You can break down your trading into those 5 elements and you pretty much have the complete picture. If you're following your rules consistently, that's what success looks like. And when you are successful at something like this, you're going to get paid off. That's, to me, that's what it's all about. And I'll put it maybe a little different way that might make sense. Making money in the market is not a goal. It's a byproduct. It's a consequence. The consequence of trading well is making money. The consequence of trading crappy is volatility and sometimes just a big, massive slam down. When you're not trading well, you may have some winning trades there and you feel like, hey, man, that's a great trade. No, it's not. It could be a crappy trade that you just happen to make money on. Just making money in trading, you're kind of missing the point. That's how you're defining success. So I want you, at least I would suggest, making a list of what success looks like in 2026. Certainly make it, I mean, we talk, our time together has to do with trading. I'm not your guru. I don't, I really suck at being married, just because I haven't been doing it for very long. But I'm getting better. Physically, I have my issues. Other areas, I have my issues. So those are for me. Don't look for me to give you advice for any of that crap. But with respect to trading, I can give you good advice for that. Strive to wind up with more next year than you had this year, and strive to trade well. If you don't have a process, get a process. You can say, well, what's your process, Dan? I talk about it all the time. If you want, I'm not marketing this right now. It doesn't matter to me what you do. But if you really want to know the complete trading process, I taught a smart trading course. You can look it up in our library. Same thing before that with a Mentor Trading Mastery, which was also an awesome course. They're pretty much they overlap, we'll put it that way. So you can get the information you need on your trading process, whether it's for me or anybody else. I'm not the only guy that has a trading process, but anybody with a trading process at least has a shot at being profitable in trading. But you got to start with the process because it's the only way you can get better. If you say, well, I'm a professional athlete, okay, great. Well, yeah, I practice every day, practice 5 hours a day. Fantastic. You're going to get really good. What sport do you play? Oh, I use a ball. Okay, great. What? Tell me more about that. Well, I use a tennis ball on Monday. On Tuesday, a lot of times I just grab a football, maybe a basketball, then maybe a volleyball. Every once in a while, I just use a water balloon because that's kind of round too. The point is, how are you going to get better at any of that? It's a ball. You're using a ball every day. You're practicing with a ball every day. You don't want to practice golf with a water balloon, that's for sure. But the point is, just to say I'm trading and I'm practicing trading, I'm working at trading, you're just using a ball. You got to have a process that you work at and you work at every day and you get it fine tuned. You decide what works for you. And the only way you can decide that is to prosecute your practice, to actually focus on something and work to get better at it. And I can have more to say about this in another venue, but I will just leave you with this aspect of things, and then we can get to a few charts. My wife Jennifer played me this this video the other day. She's an Instagrammer. I'm not. I don't even know how to get on my account, but there's a lot of good stuff on there. And so one of the clips that she showed me was of a guy lecturing people. I think they were young kids. Maybe it was in a class. And I forget the actual gist or the title of the lecture, but I'll just give it my own unique spin. Don't be afraid to suck. And what he was saying was, look, if you're going to try something new, and just think about it from your trading, okay, if you're going to try something new, you need to be prepared to look stupid. You need to be prepared to suck. You need to be prepared to be really, really bad at it to a point where other people would look at you and laugh. And that is the way of life. That's the nature of what we do as living, breathing, thinking people. And these were some of the examples that he gave. Okay, when you were a kid, and you walked, like, did you just get up one day and go like, hey, let's go walking down the street? No, you were crawling on your hands and knees. You're trying to get up and you fell over, Lord knows how many times. Sometimes you got a little owie on your knee, but most of the times you just fell over and laughed about it and then tried again. But ultimately, you started walking. And now, like there's also these little flipping midgets now that are on balance beams and stuff in the Olympics. You'll see them in a few years, spinning and doing all that kind of crap. They didn't start out that way. Okay, when you started talking, Did you just one day say, "Well, hi, Mom. How you doing? Golly gee, sure would be nice if I had some of that Gerber baby food. Like I really like all the sugars in there, and I know it's kind of like Wonder Bread, going to help build strong bodies in 12 different ways. Please, can I have some more?" No, you were doing goo goo gaga and all that kind of stuff. And how about when you ate? Did you just start cutting and then eating nicely and stuff? No, you were trying, you had food all over the place. Why? Because you didn't know how to eat, but finally you got to where you are now. The point is in trading, expect to suck when you first start. Expect it. Don't like desire it. Don't say, "Hey, man, I want to suck." But you have to embrace the horror of not being a good trader. Why? Because you haven't been doing it for that long. And being a good trader will net you a ton of money. And so it wouldn't be fair or realistic in life to think that, hey, I'm going to start trading and making a bunch of money. Because if it was easy, we would all trade and we would all be rich. But it's not. It's incredibly hard, incredibly hard. So if you're just starting out, be prepared to fall down a lot and get an owie on your knee. Be prepared to hit the water balloon with your golf club because you used the wrong ball. Be prepared to get food on the side of your mouth because you missed the mouth. Okay? Be prepared to say goo goo gaga a lot when you would like to be saying, "Hey, man, can I get some more of that Gerber baby food?" or whatever they feed kids these days. The point is, embrace the suck. Embrace it and say, "This is where I am." Because here's the deal. Once you can do that, okay, once you can actually look at what you're doing as a trader and say, "You know what? I'm brand new at this stuff, but I'm going to succeed. I'm going to trade well. I'm going to get this stuff down." Okay, then here's what you do. Random thought that just came to mind. Uh, like, I don't know, a month or two ago, we were over at Huntington Beach, the last conservative bastion in Southern California. So we're back at Huntington Beach, um, sitting on the grass in a park. And there's this guy that, and you've probably seen a similar thing someplace. There's a guy that takes a rope, special kind of thing, and ties it between two trees. And then he gets on there and he's practicing basically like walking along the rope, like 2 or 3 feet above the ground. He's walking a tightrope. He's practicing. Okay. So what's the difference between what he's doing and what one of the Wallendas are doing, the flying Wallendas, which is including the Wallenda that actually flew because he fell off the wire, Lord knows how many hundreds of feet in the air. The difference is risk. Okay, so the guy that's just really working on his little tightrope walking thing between two trees in Huntington Beach, he doesn't have much risk. He can fall and like not even fall over, just step off. You can be doing the same thing 300 feet up. There's a little bit more risk, but the discipline's the same. The act is the same. So trading is the same way. You need to be, if you're just starting trading, and you, by the way, I want to tell you this, you can have been investing or trading for 20 years, 30 years. But if you haven't been doing it in the way that you're doing it now, like maybe you've been more of an investor or something like that, but now you're trying to do something different. Don't look at all those years of experience as being worth very much. Don't think you're entitled to do better than you're doing because you've been trading for so long. Um, it would be the same thing as somebody playing one sport and then just deciding they want to do another sport and they expect to be just as good as they were. I'm sure you get the point. The point is you are where you are because that's where you are. And if you want to improve, start with the low tightrope between two trees next to the ground. you will make mistakes, but they won't cost you very much at all. And that's how you learn a process while actually making money, or at least staying in the game long enough to where you learn without losing all of your money. And it starts with a process, it starts with discipline, it starts with rules. If you can do that, I promise you, you will ultimately succeed at the best game in the world. At least that's the way I look at it. I don't know what I'd be doing if I wasn't doing what I was doing, but I guarantee you this, it wouldn't make me as happy. So that's what I guess that's what I'll impart on you today. Didn't really expect to go into this, but sometimes stuff just comes out of my mouth. But I will go through a few charts, not a lot, because there's not a lot to do. But we'll go ahead and go through some. So with the general trend is up, and this is what I think. Like today, I would say tomorrow's, like really today's the last full trading day of the year. I know the market doesn't really close early, but trust me, it kind of does. Not too many people are going to be trading tomorrow, certainly tomorrow afternoon. So I don't want to go micro analyzing certain things. Let's just say the trend is still up here. Trend is largely still up here, but I've drawn these things. This is kind of pinching in a way that I'll just say is interesting, different than the SPY. But as I look at this, this can actually kind of be coiling for a nice move up. It's kind of like compressing some energy. The Dow is in a pretty nice uptrend here, pretty choppy. I don't like all the volatility. I feel like things are pretty volatile, like really volatile right now, and I'm just not a big fan of that. I like smoother trends because they're easier to trade, but it is what it is. Here's one thing to be mindful of: the VIX, the volatility index, down at 14. Guys, this is really low. And they say, when the VIX is low, look out below. I've always looked at it in a different way. When the VIX is low, go. We like a low VIX because it means that there's complacency in the market, and complacency is a good thing if you're long stocks because complacency brings out the buyers. Okay, so we like a low VIX. Gold. Big correction yesterday. I talked about this in my morning note. Silver, pretty big as well, but it's actually back up to where it was. Guys, this is a parabolic move. I'm not going to tell you not to be in silver. I'm not going to tell you to be in silver. I'm just going to say this is a parabolic move, and it's very risky to be in here. You better have a stop someplace. You better use, for example, the 8-day exponential moving average. If the stock closes below there, that's your drop dead period. Same thing here with gold, like on the 20-day moving average. But so like all of the gold stocks that we were in, and I remember I mentioned like 2 weeks ago, I said, I'm not maintaining this list while I'm on vacation. I'm going to spend time with my family. And so you're kind of on your own as far as trading these things. But so for gold, for example, and I'm not going to go through the actual list, you could do that yourself, but this is back to the 20-day moving average. Newmont Mining, trend is still intact, no problem there. GDXU, big nasty sell-off. Today it's up a little bit, but this still has a lot of work to do. By the way, it's a leveraged ETF. That's pretty sporty. Okay, silver, again, still in an uptrend. Barrick Mining, still in an uptrend. GDX, still in an uptrend. KGC, still in an uptrend. By the way, everything that I've shown so far, is any of it actionable? Not to me. GDXJ, nothing magical about this. It's still holding trend, but there's nothing to be done here. GFI, we need a few more of those switches in our house. Wouldn't be blowing as many fuses. No, this is still kind of forming a base here. Maybe ultimately it's going to go up, but nothing to do now. FNV, still kind of in an uptrend, not really where you want to be. So other stuff on the list. Tesla, no, not there. NOV, For whatever reason, the chart on the active trade list comes up to Novos, whatever it was, comes up to that one. I don't know why, but it's this one, NOV. So this is still in a consolidation pattern, nothing to do. ROIV, still on trend. 21-day moving average support, nothing really to do here. Rivian, it's a nasty sell-off, but the base, in my view, is still intact. It's a pretty actively traded stock. If you can't handle these swings, and they're pretty substantial, then this is not your car. Well, it's my car, but it's not your trade. Now, Tetra, this is working just fine. Okay. No, now I'm going to be sending a note to Fox because they want me on next week a couple different times. I don't know if it'll come to fruition because a lot of times, I'll say, "Hey, are you available on such and such?" I'll go, "Yeah." And then on such and such, they go, "Oh, well, thanks for being available, but we don't need you." So I don't know. But one of the things I'm going to be sending them has to do with senior living, assisted living, stuff like that. And I got this credit, given where credit is due. I got this idea from Dave Ryan on IBD Live this morning. He was talking about this. And so it really, really got me interested. So I did a little more research on these stocks. And one thing, we make demographics, turn demographics on our side, and that is that there's a crap load of people that are going to be going into assisted living homes over the next 10 years. All the baby boomers are getting old enough to where their kids don't want to take care of them, and I get that. And so they're going into the old folks' homes. Okay, so the old folks' homes are going to do pretty well. And by the way, don't take issue with my making light of it, the old folks' homes and stuff like that. I'm going to be 68 next year. I'm not that far away. Okay, so save your triggering. The old folks' homes. So the old folks' home stocks are actually setting up pretty nicely. And these are like really, really good. They got pretty good fundamentals. For example, like this one, Ensign Group, you can look here. This is a real textbook chart. It's a great chart on MarketSmith. We like all the blue stuff here. That's pretty good. There's a couple things, like just one thing that Bill O'Neill would take issue, and that is that the last earnings per share percent change in the last quarter, this is earnings, not revenue, was less than 20%. So yeah, it was just 18%. Basically, this is just a stock waiting for more buyers to come in. So like I would set an alert, I already have, but I'll set another. I'll set a price alert like right about there to catch this if it starts running higher. Pennant Group. Look at where this thing has been. This is like the longest cup and handle I've ever seen. But this is still in this holding pattern. None of these are ones, and I wish it were otherwise, none of these are stocks that I would say, let's start a position in them right now. The only reason I would be doing that is if I was just kind of like looking for something to do. Got to keep new toys in the sandbox. It's not the way we want to do things here. So if this stock runs up above here, I don't want that. But if it runs up above here, I keep hitting the same one. I have mouse dyslexia. Then that's one to buy. Now this one is really cool. National Healthcare Corp. Really, really strong trend. Really strong trend. And I like this. The issue here is the relative strength, and this is according to MarketSmith. The relative strength is just 87, and that can kind of work, but you really like it over 90. But you can see here on the chart, it's a good looking chart. On the weekly chart, earnings, this is the earnings line, quarterly earnings line is moving up. It's doing really, really well. The up-down volume ratio is good at 1.3. Anything over 1 means more buyers than sellers. So that's really good. EPS rating's good. Composite rating, It's kind of hard to get above a 97. So the point is, this is a stock that is definitely just itching to be on my active trade list, and I'll probably wind up putting that on there tomorrow. And my note will reference this video today if you can get through all of the first stuff to get to this. And then PACS Group, PACS Group. This is a total hair on fire stock. You want to use the 8-day exponential moving average for this. Like if the stock falls below the 8-day EMA, you definitely want to watch it. And if it closes below the 8-day EMA, I wouldn't want to be long the stock. But you can see, and this was one that I think Dave was mentioning today, and he got absolutely whacked on this back here. And it was because the stock fell so hard because they were charged with having accounting irregularities. I don't know what happened to that. I don't know what that was all about, and I don't care. But you see the way this stock's trading, and this could be a real winner. Okay. So one thing I'm going to leave you with is this. MicroStrategy. This is the double long MicroStrategy ETF. Okay, at one point this was up at $220. Now it's down here. It's basically gone flatline at almost 99% decline. This is why I'm pointing this out to you, and I'm just going to leave you with this. Never let yourself get in this situation. I got stopped out of this stock. I actually lost a pretty decent amount of money on it. One day, I'll tell you exactly why, because I was teaching a frickin' 59-minute trading class, and I saw the stock reversing, and I'm going like, okay, well, as soon as the class is done, I'll kind of deal with that. I didn't want to interrupt the class. Okay, well, don't ever do that. Money's money. And this stock took such a big, massive dump in a day after a gap and crap. Now, if you were in this trade back here, and then you said, oh my God, I can't afford to sell, I would lose too much money. All right, from the point where you could not afford to sell, you are now down 97%. Now you really can't afford to sell because, oh my gosh, look at the money you will lose. My point is this: you have already lost the money, you just haven't figured it out. You just haven't admitted it. So the way you get away, the way you completely sidestep this type of thing is always have an exit. Always have an exit plan. Always have a rule to get yourself out of a trade that goes bad, because you can always live to fight another day and you can always buy it back. But what you will find invariably is the stock that you got stopped out of at a loss, and then that stock continued to go down, you are not going to buy it back because you don't buy stocks that are going down. So it's just a stock that you're going to avoid. You don't ever revenge trade. If you lose money on a stock, you didn't lose money on the stock. You lost money on the trade. Make a better trade next time. Okay. Also, these ETFs, the reason this is down at 405 is because there's no bids for it. That's why. If somebody was really, really wanting to accumulate this, it doesn't matter what MicroStrategy is doing. If somebody really decides they want to buy a crap load of MicroStrategy, a twofer here, this thing would go up. So if you're sitting here going, well, this will come back when Bitcoin comes back, guys, no, it won't. Sorry, it won't. Do I have to explain to you why? I'm not gonna. It's not gonna come back when Bitcoin comes back. Bitcoin will come back. This will not. I'm not going to apologize for telling you the truth. Okay. So that's all I got for you today. I planned on it being a short video. It is if you're tracking it on the calendar, but not if you're looking at the clock. So thanks for hanging in there with me. I appreciate everything that Scott and Andy and Sam have done during my time off. I will tell you, it makes a huge difference for me to be able to truly take some time off and not have a fear that everybody's going to cancel because I'm not around. And that truly used to be a big fear of mine. And I will tell you from knowing a lot of other people in my business and my aspect of the business, that's a common fear. And it's something that actually happens a lot where if the guy, the magnet, leaves for a bit to have a personal life, everybody leaves. Up, that's it. So with Scott and Sam and Andy, I don't have to worry about that. I appreciate them all very much, and I appreciate you. Okay, so I will do the strategy session tomorrow as well. Won't be as long as this one. So thanks for hanging in with me. All right, I'll see you next time.